Hello everyone, welcome to EduTap and welcome to today's Finance 360-degree session. In today's session, we are going to discuss a very important notification of the Reserve Bank of India, a very important master action of the RBI, okay? So in today's session, we are going to discuss about the master action regarding the compounding of contravention under the Foreign Exchange Management Act 1999, okay? And this is recently released by the Reserve Bank of India on April 22nd, 2025, okay? And this was also updated recently in April 24, 2025. So we will discuss the important points from this master action that you need to keep in mind. As well as let me tell you that in September 2024, this compounding of contravention, this topic was in news, okay? So previously, the topic was in news because there were the directions that were released by the Government of India. So we will discuss that what directions were released by the Government of India also. So this is a very important topic that we are going to discuss in today's session, and let me tell you that you can expect objective questions from this topic in your RBI examination, okay? So let's get started with the topic and try to understand the topic in detail so that you have the clarity, because the terminologies are quite difficult, but I will simplify it for you, okay? So let's get started for the session, but before that, do subscribe to the YouTube channel of EduTap so that you continue getting these relevant videos, and do join our Telegram channel where you will get the PDF of the session, and the link for the Telegram channel is provided in the description box below, okay? Now starting with the topic, first of all, the provisions. So the master action we are going to discuss. So the provision of section 15 of Foreign Exchange Management Act. I hope you all know that there is the Foreign Exchange Management Act of 1999. So section 15 of this act, it enabled the compounding of contravention. Now the terms are very difficult. What is a contravention? What is compounding? So first let's understand the terms, that is contravention and compounding. So contravention, this is a breach of the provisions of the Foreign Exchange Management Act. I hope you know that under the Foreign Exchange Management Act, there are certain restrictions that how much foreign direct investment can come into our country in different domains, how much foreign portfolio investment can come into our country, how much FDI or how much FPI can go outside, there are restrictions on the external commercial borrowing, that there are certain limits of the external commercial borrowing if the money is coming into our country to purchase the shares. That means, let's say foreign portfolio investment is coming into our country. For the purchase of the shares, there is the timeline that has been decided that within this timeline, the shares have to be allotted, or otherwise after a certain period, the refund has to be made. So there are certain norms that are present, okay? Under the Foreign Exchange Management Act, that also lays down the guidelines, the rules regarding the foreign exchange, okay? So this is the idea. Now, if any of the provision of this Foreign Exchange Management Act is breached, so that is a contravention, If you are breaking the rules and regulations laid down in the Foreign Exchange Management Act, you are doing the contravention, okay? So contravention is a breach of the provisions of the Foreign Exchange Management Act of 1999, and any rules, regulations, notification, orders, directions, circulars issued thereunder. So if any of these rules, regulations, notifications that are laid down under the Foreign Exchange Management Act, if there is any breach that is happening in the provisions, then that is a contravention. So we have understood the contravention. Contravention is a kind of breach that you are doing of the provisions or rules and regulations. What is compounding? Compounding is a kind of settlement. Okay? Now, why the compounding happens? So compounding, it refers to, first of all, the process of voluntarily admitting the contravention. So let's say I have done a mistake and I had to do the reporting of the external commercial borrowing, and I had to do the reporting of the repayments, but the reporting I was not able to do within the timeline because of the nature I was not aware about, or because of the rule I was not aware about. But as soon as I came to know that there is such a rule, I went to the Reserve Bank of India, or I sent an application to the Reserve Bank of India that, okay, by mistake I have done this contravention, I have breached the provision that I had to do this reporting, but I forgot to do this reporting. So I am voluntarily accepting my mistake. Okay, I am voluntarily accepting my mistake. So the RBI will allow settlement after the process. The RBI will allow the settlement. So this is compounding. Compounding, it refers to the process of voluntarily admitting to the contravention pleading guilty, that okay, I have done this mistake, and seeking redressal, that kindly resolve it. I have done the reporting now, but it was not within the timeline. Okay, so seeking redressal. So the Reserve Bank is empowered to compound any contravention. The Reserve Bank of India is empowered to compound or to settle any contravention that is defined under section 13 of the FEMA 1999. So that is all the details or all the points in the section 13 of FEMA 1999. So basically we will discuss the section 13 of FEMA 1999. It is basically related to the provisions and the rules and regulations under the FEMA 1999. Okay, so Reserve Bank of India is empowered to compound to settle the contraventions as defined under section 13 of FEMA 1999, except the contravention under section 3A. So section 3A is what? That we have to understand. So section 3A, this cannot be compounded by the RBI. So if you are doing a mistake, if an authorized dealer or if a investor or if a person is doing a mistake that is related to the section 3A, then the RBI do not have the power to compound that contravention. What is the section 3A of the FEMA 1999? So section 3A says that deal in or transfer any foreign exchange. If you are dealing in or you are transferring any foreign exchange or foreign security or foreign securities to any person not being an authorized person by the RBI. So then this problem, if you are creating or if you are dealing in or if you are transacting the foreign exchange or foreign security to any person that is not an authorized person, then this kind of contravention that you are doing, this kind of contravention or the breach that you are doing, that cannot be compounded by the Reserve Bank of India. Okay, so this is the idea. So RBI can compound, RBI is empowered to compound the contraventions detailed or laid down under the section 13 of the FEMA 1999, but the RBI do not have the power to compound the contravention under the section 3A. That is this that I have shown you. So compounding of contravention, first of all, compounding is a voluntary process. It is not like that RBI will tell you then you will plead guilty. No, it is a voluntary process. So compounding refers to the voluntary admission of your mistake and pleading guilty. So it is a voluntary process in which an individual or a corporate seeks compounding of an admitted contravention. So this is the basic idea. I hope this is clear, because if the terminologies are clear, the compounding and the contravention, the further things will be easier for you. So basically the provision of section 15 of FEMA 1999 enable compounding of contravention, and it empowers the RBI to compound any contravention that is detailed in the section 13 except the section 3A. All the compounding can happen by the RBI except the section 3A. Okay, so now how the compounding process will happen, what will be the step-by-step process that will be followed by the RBI for the compounding? Who has decided it? RBI has decided it? No, it is the Government of India. So Government of India, first of all, till now, any problem, any confusion anyone has? Give me a thumbs up if everything is clear till now. Okay. So Government of India wide notification dated September 12, 2024 has notified the foreign exchange compounding proceeding rules 2024. So you can understand that the previous rules of 2000 were replaced by the new rules by the Government of India. Okay, and that's why the RBI has released this master direction stating the rules that the RBI will be following. Okay, so this is the idea that Government of India has updated the rules for the compounding in 2024, and that's why RBI has released this master action. Now, coming to the next point, see, there are certain contraventions that are very, very harmful for the country. Let's say it is related to money laundering. Let's say terrorist financing has happening through the foreign exchange. Like if you are sending the foreign exchange, and that is, let's say XYZ person is sending the foreign exchange, and this foreign exchange is used for the terrorist financing or money laundering is happening. Okay, so if such kind of things are happening, the RBI cannot compound, cannot settle such contravention, because this contravention is a very big contravention. This is a very big breach that the person or the entity has done. So if an entity is engaged in the terrorist financing, money laundering and such kind of activities that are harmful for the country, then the compounding of the contravention cannot happen, then the settlement of the breach cannot happen. Then the case will go to the Directorate of Enforcement, okay, under the Government of India, under the Ministry of Revenue, and there is the adjudicating process that will start. There is the adjudicating process that will start, okay. So this is regarding that. In terms of section 13(1) of the Act, if any person contravenes any provision of FEMA 1999 or any rule, regulation, notification, direction or order issued under the powers of the FEMA 1999 or contravenes any condition subject to which an authorization. So let's say there was authorization that was given to a entity ABC to do the foreign exchange transactions or to do the investment in the other countries, and there were certain, the Reserve Bank had given the permission to the ABC to do the foreign transactions under certain authorizations, like ABC has to follow certain guidelines and has to follow certain norms. But now the ABC is not following those norms. That is, if the there is the condition of the authorization, they are not being met by the ABC. So all these contraventions that are being done, let's say the breach is happening of the rules and regulation, or let's say the act is not being followed, or let's say the contravention is happening where the ABC entity that has got the permission to invest in the other countries under certain rules and regulations, now the ABC is not following those authorizations and the rules and regulations. So in this case, upon adjudication is done by the adjudicating authority that is chosen by the central government or that is nominated by the central government, okay. So central government nominates or hires a adjudicating authority, and that adjudicating authority, it is not the RBI, it is a entity that is chosen by the Government of India that is the adjudicating authority that do the adjudication. In the case of adjudication, where the breach is very big or where the person, let's say, compounding of contravention only happens when there is the voluntary acceptance of the mistake. But let's say the person has not voluntarily accepted the mistake, or the person is engaged in certain kind of very harmful activities like terrorist financing and such. In that case, adjudicating authority will be involved that will do the adjudication. Now, in the case of adjudication that is done by the adjudicating authority, when the adjudicating authority is getting involved, in this case, the person XYZ that has done the mistake or the person ABC that has done the mistake be liable to a penalty up to thrice the sum involved in such contravention. If you have done a breach, let's say you have done the extra investment as compared to the limit that was decided. The limit was $1 billion, but you have invested $2 billion. So you have invested more. You have invested more than the limit that was decided. Okay. So let's say there is some sum that is involved in such contravention where the amount is quantifiable. So the penalty can be up to thrice the sum that is involved in the contravention. Okay. Or up to rupees 2 lakhs where the amount is not quantifiable. Let's say the amount is not quantifiable. You have done a breach. Let's say you have not done the reporting in the given timeline. So in that case, if the amount is not quantifiable, the amount is not involved. So in this case, the penalty can be up to rupees 2 lakhs. Okay. And where the contravention is a continuing one, let's say you are continuously doing the contravention. Let's say the reporting had to happen within 15 days, but you have not reported in the 16th, 17th, 18th day. So the continuation is happening of the breach. You are not reporting right now also. So in this case, the penalty which may extend to rupees 5,000 for every day after the first day during the contravention continues. Okay. So this is the idea. This is regarding the adjudicating authority. Adjudicating authority is nominated or is chosen by the central government, and adjudicating authority do the adjudication in case where the person has not voluntarily accepted the mistake or the person is not voluntarily pleading guilty. So in the case where RBI is not involved, adjudicating authority that is appointed by the central government, Government of India, do the adjudication. Okay, so this is the idea. Now coming back to the point of the master action, so this was also mentioned in the master action. Now any contravention under section 13 except section 3A may on an application, let's say that this was the case where the person is not accepting the mistake by themselves, but let's say the person is accepting the contravention and the person is doing the compounding, that the person is voluntarily accepting the mistake. So in this case, the application is sent by the person to the Reserve Bank of India that okay, I have done this mistake, and this has to be compounded, this has to be settled within 180 days from the date of receipt of such application from the contravenor or from the person, okay, by the officers of the Reserve Bank. So in the case where the person has pleaded guilty, in the case where the person is voluntarily asking the RBI that okay, I have done the mistake, can it be resolved with the RBI? So RBI is saying that okay, this can be resolved, and the compounding process has to finish within 180 days of the receipt of the application, okay. Next is, accordingly, compounding applications shall be submitted by the applicants. So applicants, let's say XYZ person has done the mistake. Let's say some breach has been done, some reporting requirement was not being met. So the XYZ person has done some mistake, has done the contravention. Now the XYZ person is voluntarily telling about the mistake, okay. So the applicant has to submit the application to the respective regional office under whose jurisdiction they fall, or to the Foreign Exchange Department, the central office in New Delhi, okay. Let's say we are talking about foreign investment related contravention. Let's say this XYZ entity has done the foreign investment, and the limit has been breached, the limit has been exceeded. So in this case, the limit has been exceeded, that is not allowed. So the XYZ person has realized, or the XYZ entity has realized that they have done the mistake, and they are sending the application to the Reserve Bank of India, to the regional office. So with respect to the jurisdiction to be exercised by the regional offices, any compounding application, any settlement application related to foreign investment related contravention, this is to be submitted to the regional office having jurisdiction over the registered office. So where this XYZ is registered, where the XYZ, let's say, has the registered office in Mumbai. So the regional office of Mumbai will handle this compounding of contravention. This is the idea, okay. So if in the case of foreign investment related contravention, the regional office will handle the contravention, the compounding of the contravention, where the entity has the office, okay, where the contravening entity or the entity that has done the breach has the office, okay. Now coming to the next point, all compounding applications shall be submitted physically or through the PRAA Portal. PRAA Portal, I hope you know. You have to tell me the full form of PRAA Portal. Can you tell me in the discussion, like in the comment section, or after the session, if you are seeing the recorded, tell me in the comment section what is the full form of PRAA Portal. It is a very, very important portal of the Reserve Bank of India, okay. So all compounding applications shall be submitted physically or through the PRAA Portal along with the prescribed fee of 10,000 rupees plus applicable GST, that is right now 18%, by way of demand draft or through the NEFT and through other electronic or online modes of payment. The application that is being sent has to be sent with the application fee also, okay. In respect of a contravention committed by any person within a period of 3 years, let's say that you have done a breach, you said that you forgot to do the reporting of the shares that you have bought in US, okay. So there is the reporting that has to be done for the shares that you have bought in the foreign countries. You have forgot to do the reporting, okay. You accepted your mistake, and the compounding of the contravention happened. Now within 3 years, within 3 years, you have again done the same mistake. That is, either you are doing it purposefully or you are not focusing on the rules and regulations of the FEMA. So here, in respect of contravention committed by any person within a period of 3 years, if you are making the same mistake within the period of 3 years from the date on which a similar contravention was committed, the same was compounded. So previously you had done this contravention, you didn't do the reporting of the shares, and now within the period of 3 years, you have again done the same contravention, and the previous contravention was compounded for you. Previous contravention was settled by the RBI for you. Now, if you have done the same contravention again within the period of 3 years, now this contravention will not be compounded by the RBI, okay. So such contravention, again, if it is happening within the period of 3 years, it will not be compounded by the RBI, and the relevant provision of the act will be applied. Any contravention that is committed after the expiry of a period of 3 years, then such contravention, even if it is repeated, but it is happening after the time period of 3 years, then it will be considered a first time offense or the first contravention. Okay, so the point is that if a entity is doing the same contravention again, the previous contravention was done, it was compounded, and within the 3-year time period, if the same contravention is happening, that will not be compounded. But if the 3-year time period has finished, after that the contravention will be considered the first contravention, or then it can be compounded. Okay, so this is the idea. Now, no compounding application shall be processed unless the requisite administrative action is completed by the applicant. So basically, let's say the XYZ person has done a reporting breach. That means the person has not done the reporting within the given timeline. Let's say the reporting had to happen within 15 days. Okay, but the reporting was not done within 15 days of buying some buying some investment in the other countries or doing some investment in the other countries. There is 15 days timeline where the reporting had to happen, but the reporting was not done within that timeline. Now the mistake has been done, the reporting breach has happened. So this is a contravention, this is a breach that is done. Now the XYZ entity wants to compound this contravention. The XYZ company is saying that they have mistakenly not reported, and they want to compound, they want to voluntarily accept, and they want to settle this contravention. Okay, so now before the settlement application is accepted, the XYZ company has to resolve the problem, has to actually report the breach. Okay, so this is the idea, that if you are sending the application of contravention to the Reserve Bank of India, that you want to compound your contravention, you want to compound your breach, you want to settle the breach that you have done, first resolve that breach. Then the RBI will think about compounding. First resolve the breach means first, like if you have not done the reporting, do the reporting first. You have not done the submission, do the submission first. So this is the administrative action. So no compounding application shall be processed unless the requisite administrative action completed by the applicant. So applicant, if they are sending the application will only be accepted once they have done the administrative action. Administrative action means they have done the corrective action. If the reporting breach has happened, they have done the reporting. If the investment breach has happened, that means they have exceeded the limit. So they have reduced their investment. If there is any other breach that they have done the corrective action. So while sending the application to the RBI, do the administrative action, that means do take the corrective action. After that, the RBI can think about compounding you, or the RBI can think about settling. Okay, you have taken the corrective action, just pay this amount, that is fine that you have to pay. So once you have done the corrective action, you have sent the application and you have done the corrective action, so the RBI will think of compounding by just taking a fine, but just taking a small fine. This is the idea. Okay, let's say now contravention of serious nature. If the contravention is happening of serious nature, that means it is related to money laundering, it is related to terrorist financing, it is related to the affecting the sovereignty and the integrity of the nation. So if the contravention or the breach is a very big breach, that is of very serious nature, then the RBI cannot take into account the compounding of the contravention. This case will go to the Directorate of Enforcement. Okay, this case will go to the Directorate of Enforcement under the Ministry of Revenue. Okay, so this is the idea, that if the contravention is of serious nature, the case will go to the Directorate of Enforcement. Contravention, the compounding of contravention will not happen. Similarly, let's say there is the fine that had to be taken from the XYZ person for the compounding of contravention. For the compounding of contravention, there is some amount that had to be taken from the XYZ. Within the timeline, the person has not paid the fine. So in this case also, the case will go to the Directorate of Enforcement. Okay, so or where the contravenor, where the applicant fails to pay the sum for which contravention was compounded, the fine or the payment that had to be taken from the person for compounding the contravention, the person has not paid it. Let's understand this with an example so that you are able to understand it better. Okay, contravention occurs that you have done a mistake. The XYZ person or entity violates the FEMA provision. Some provision has been violated. In this case, applicant files a compounding application with the Reserve Bank of India. Now, when the application has been filed, the applicant also has to take the administrative action. That means corrective action. Corrective action has to be taken. So, before RBI processes the application, that is before the RBI further takes the process of the compounding, the applicant must complete the requisite administrative action like filing the delayed returns, reversing or unwinding the non-compliant transaction. Let's say you have done the investment higher than the required investment, higher than the accepted investment. Let's say you have done the investment higher than the accepted investment. So you have to reduce your investment to the limit, or let's say you have not done the reporting, you have to do the reporting. If you have not done the submissions previously, you have to do the submissions. So before the RBI processes the application, the administrative action has to be completed by the applicant. If the breach has been done by the applicant has to resolve that breach. Okay. RBI reviews the case. After that, after the administrative action has been taken by the applicant, the RBI reviews the case and issues a compounding order that okay, now this breach will be resolved, now this contravention will be settled, which states the compounding amount to be paid. Okay, so now RBI is saying that okay, we are settling this breach, that okay, you have done the mistake, but you have resolved the mistake, you have taken the administrative action, you have done the corrective action, so now just pay this fine and we will let you go. Okay, so compounding amount has to be paid. Now let's say the applicant is given a deadline. Typically 15 days are given to pay the fine, to pay the compounding amount, to get away with that breach. But let's say the person is not paying the fine, the person is not paying the compounding amount within 15 days. So in this case, if the applicant fails to pay within this deadline, the matter is referred to the Directorate of Enforcement. Okay, so Directorate of Enforcement under the Department of Revenue, Ministry of Finance. So it is not Ministry of Revenue, sorry, it is Department of Revenue under Ministry of Finance, Government of India. Okay, so Directorate of Enforcement, it is under the Department of Revenue, Ministry of Finance, Government of India. Okay, so the case is sent to Directorate of Enforcement. So this is the idea that if any serious nature like contravention is happening of the serious nature related to money laundering, terrorist financing, the case will go to the Directorate of Enforcement. Or if the contravener, that is the applicant, is not paying the compounding amount within the given timeline, then also the case will go to the Directorate of Enforcement. Okay, so if the applicant fails to pay the compounding amount within the deadline, then also the case will go, or the matter will be referred to Directorate of Enforcement. I hope this is clear. Is this clear? See, many of the students don't understand the Hindi. That's why I don't use Hindi. Many of the platforms are there that are explaining in Hindi. But what about the students that don't understand the Hindi? Right? So I have to take care of those students also now. There are various platforms that can explain you in the multiple, like in the bilingual form. But there is no platform that is explaining in English only. So I am thinking about those students also. That's why I am bringing the example so that Hindi speaking, English speaking, all the students can understand. Okay, now moving forward. So in terms of Rule 9, of the Compounding Rules 2024, basically it is saying that which which contravention the RBI cannot compound. Now we will understand that there are certain contraventions, or there are certain breach that the RBI cannot compound, that the RBI cannot settle. So can you tell me certain breaches that RBI cannot compound? We have just discussed it regarding the money laundering. If the breach is happening, if the contravention is happening regarding money laundering, that the RBI cannot compound. Terrorist financing, if such a breach is happening related to terrorist financing, that contravention the RBI cannot compound. So there are certain contravention that the RBI cannot compound. So Rule 9 of Compounding Rules 2024 says that the transactions in which amount involved is not quantifiable. Let's say the amount is involved, there is certain amount is involved, but it is not quantifiable, or let's say there is no quantifiable or number that can be identified. Okay, where the adjudicating, so this contravention cannot be compounded by the Reserve Bank of India. Okay, so in which in terms of Rule 9 of compounding rules, transactions in which amount involved is not quantifiable, this cannot be compounded by the Reserve Bank of India. Where the adjudicating authority, let's say there is a adjudicating authority that has already given a decision that okay, this XYZ person has done a contravention, has done a breach, and the adjudicating authority has recognized this breach, has already identified this breach, and adjudicating authority has taken the decision that this entity will have to pay 10 lakh. Now this entity is going to the Reserve Bank of India saying that okay, we are voluntarily accepting that we have done the mistake. So XYZ person is going to the RBI for the compounding of contravention. But the RBI will say that already the adjudicating authority has given the decision. That means you are accepting your mistake after you have got the punishment from adjudicating authority, because you do not want to pay the hefty fine, because usually the RBI charges, because the voluntary acceptance is happening, so RBI charges lower amount. So this is the idea, that where the adjudicating authority has already passed an order imposing penalty under section 13 of the Act, in this case the RBI cannot compound the contravention now, because the decision has already been taken by the adjudicating authority. Okay, where the Directorate of Enforcement is of the view that the compounding proceeding relates to a serious contravention, money laundering, terrorist financing, such kind of contravention is happening, so RBI cannot compound the contravention. So such contraventions they are not eligible for compounding by the Reserve Bank of India. So remember it, that if the amount is not quantifiable, if the decision has been taken by the adjudicating authority, if the contravention is of a very big nature, a very serious nature, so in this case the RBI cannot compound the contravention. Okay, moving forward, now this is a matrix. So usually the adjudicating authority charges the penalty amount, it can be up to 3 times of the sum involved in the contravention. But when it comes to the compounding, if we are talking about penalty that the adjudicating authority charges, or it can be up to 3 times the amount that is involved in the contravention. But when we are talking about compounding of contravention, because the entity has voluntarily accepted the mistake, the entity is voluntarily saying that okay, I have done the mistake. So in the case of compounding of contravention, the fines are usually lower, and the fines are determined on the basis of this chart. Now remember that there are hundreds of numbers given in this master action. You do not have to remember the number. Just remember that what is the contravention that can happen. Okay. So penalty amount can be up to 3 times the sum involved in the contravention. Now let's understand that RBI, how much RBI can charge if the compounding of contravention is happening. Okay, so in the case of penalty, the adjudicating authority can charge 3 times of the amount, up to 3 times of the amount. But in case of compounding of contravention, usually the fines are lower, and the fines are decided, or the compounding amount is decided on the basis of these table. So first of all, type of contravention is reporting or submission. Let's say a basic mistake has happened, you have forgotten to do the reporting, or you have forgotten to do some submission. Okay, so you had to do, the reporting, you forgot to do the reporting of the foreign investment in shares on allotment, or you forgot to report regarding the transfer of shares that you are doing. You have transferred your shares to some non-resident, to some foreign entity. So you have transferred your shares to the foreign entity, you had to report this, but you forgot to report. So there is a reporting breach that has been done. Or let's say you forgot to report that you have been allotted some shares of some foreign company. So you had to report that, you forgot about that. You forgot, there is non-reporting or incorrect reporting of the external commercial borrowing, the repayments that you have done, you have forgot to report it regarding that. So you can read this, I've just brought various examples. When you have forgotten, or you are making a breach in regards to reporting a transaction or submitting required documents, this kind of breach if you are doing, for that, there are the fines that have been laid down. The fixed amount that you will have to pay is INR 10,000. Okay. If the contravention, the amount involved, that is the shares involved, or the external commercial borrowing involved, or the transfer that is happening is of less than 10 lakh, then compounding amount that may be imposed in addition can be 1,000 per year. Okay. So this is the variable amount. So this is the idea. You do not have to remember the numbers. Just remember that this is the type of contravention that can happen, or the other types of contravention. So the next type of contravention is that submission of AAC, APR, FLAR. So these documents have to be submitted. Okay. So there is the annual performance report that has to be submitted. So APR means annual performance report has to be submitted for the shares that you have bought in the other countries. There is annual activity certificate that you have to take from the chartered accountant. So annual activity certificate you have to take from the chartered accountant. Let's say you have not taken these certificates and you have not submitted these reports or the certificates to the RBI or to the authority involved. So if you are not submitting the documents, then you have done the breach in the FEMA Act. Okay. Then the FLAR is the foreign liabilities and asset form, foreign currency. Then there is foreign currency gross provisional returns. So these are the technical contraventions. These are the technical contraventions where you have not done the submission of particular documents. Okay. And here you have to pay the INR 10,000 per contravention that you have done, or the returns or the documents that you have delayed. This is the idea. So this is another kind of contravention that can happen. Third kind of contravention is allotment. Let's say that now here we are talking about an Indian company. XYZ is an Indian company. Now this Indian company said that the foreign investors can invest in the shares, the fresh issue of shares. The XYZ company is doing a fresh issue of shares and has taken the investment from the foreign investors. Now the allotment of shares should happen within a timeline, within a set timeline. Okay. Now the allotment of shares was not done in the set timeline. So that is a breach that the XYZ Indian company is doing. Okay. Let's say the non-allotment, let's say the allotment of shares has happened after the given timeline. So that is a breach. The allotment should have happened within the given timeline, but that was not done by the company. Or let's say non-allotment has happened. Non-allotment. The foreign investors didn't get the shares. Non-allotment is there, but the refund was not made to the foreign investors within the given timeline. For the refund also there is a timeline. So if there is non-allotment of shares, the refund should have been given within a timeline, but that was not given within the timeline, or the allotment was not done within the timeline to the foreign investors. So in this case, this is a breach for which the charges can be taken, for which this is a breach that has been done. This is a breach that has been done by the Indian company. By the Indian company, the allotment was not done within the given timeline to the foreign investors, or in the case of non-allotment of shares, the refund was not given to the foreign investor within the timeline. Okay. So in this case of breach, if the entity, XYZ entity, is recognizing that I have done the breach, I had to do this allotment within this timeline, but I didn't do so. So compounding of contravention can happen, and this is the compounding amount that can be given. Okay. Now contravention is done by the, now coming to the contravention that is done by the foreign investors, let's say, or the foreign companies. So there is the liaison office. So now there is the liaison office, there is the project office and the branch office. Liaison office, as the word suggests, it is the office that is a communicating office between the main branch, that is a foreign company we can say, or the main parent company, that is a foreign company, and the Indian branch. Okay. So liaison offices, they are the communicating offices between the main parent company, that is a foreign company, and the Indian branches or the Indian business partners. Okay. So liaison offices, as the word suggests, it is an office that facilitates close working relationships and the communication between the parent company situated abroad, so foreign main parent company, and the business partners in India. So liaison office is only a communicating office between the parent company of abroad and the Indian business partners. Branch office. So branch office mirrors the function of a parent company and they can undertake. So let's say there is a branch office, there is a parent company that is in abroad, let's say there is a parent company in abroad, it has opened a branch office in India. So the branch office in India can do certain services or can give certain services as the parent company is giving in abroad, but it should be as approved by the RBI. So the branch office mirrors the function of the parent company of abroad, and the offices, the branch offices that are established in India, they can perform similar facilities and they can provide similar services as the branch office, but those services should be approved by the RBI, or RBI can reject that, okay, you can give certain services but you should not give the other services. Okay, so that can happen. Then coming to project office is the office of a foreign company that can undertake certain projects for the foreign company. Okay, so this is the idea. So these are the different offices. Now license offices, let's say it is only for communication between the main parent company and the Indian branch, but it is also undertaking investment, it is also providing certain services, so that is not allowed. License offices are only for communication. If it is providing extra services, that is not allowed. The branch offices, let's say it was allowed to provide 3 services, but it is providing 6 services in India, that is not allowed. Only those services that are approved by RBI can be provided in India by the branch office. So if it is providing extra services, that is not allowed. Let's say that this project office was only allowed to work in India for certain projects, but it is also working in other areas, so that is also not allowed. So the offices have a domain that they can work in. If they are extending their hands, if they are going out of their domain, so that is not allowed, and in this case of breach, they will be penalized. Okay, they will, if they are voluntarily accepting their mistake, they will have to pay the compounding amount. Non-quantifiable means reporting. Now reporting, let's say there was some submission that you have not done, so here the quantity cannot be quantified. Okay, so in this case, or in the case of reporting, it is quantifiable. In the case of, okay, this is, so in the case of reporting submissions, it is quantifiable because you can quantify the shares for which the reporting didn't happen, and all these things, the submission, and thus they are quantifiable. Okay, non-quantifiable usually can be in the case of small investors, okay, that were not aware about the rules, and due to that they have done some breach, that is non-quantifiable. Let's say such kind of event has happened where they have mistakenly like connected with such non-residents that they should not have connected with. Okay, so certain ideas, but here you have to focus on the main reporting, or the main like the norms that is given. Okay, now coming to the 4th point, that is any contravention pertaining to issuance of any guarantee. If let's say a Indian company is giving a guarantee that was not allowed, it was not allowed, or the guarantee has been given. The guarantee, let's say you are taking a loan, I am giving a guarantee on your behalf that you are taking the loan of 10 lakh rupees. If you were not able to pay the amount, I will have to pay the amount, right? That is a guarantee. So Indian company, let's say, has given some guarantee. Now if the guarantee is not allowed, then that is a breach. Let's say the guarantee has been given of the higher amount as permitted by the RBI, or as permitted under the FEMA Act. So FEMA Act has permitted certain guarantees, but you are giving higher amount of the guarantee, so that is also a breach. Okay, so issuing a guarantee without the RBI approval, or guarantee for a prohibited transaction, or guarantees exceeding the permitted limits. So if you are giving the guarantees that are not allowed, or that is exceeding the permitted limit, then if you are voluntarily accepting your mistake, you will have to pay the compounded amount to settle the contravention. Okay, next is, okay, so the next is all other non-reporting contraventions that are happening. Okay, any other non-reporting contravention that is happening, that is not laid down in the first 4 categories, so that is non-reporting contravention. Okay, so the above amounts are presently subject to the following provisions. First of all, the compounding amount payable shall not exceed 300% of the sum involved in the contravention. So this is the idea. Now in case the sum involved in contravention is less than 1 lakh rupees, if the sum involved in the contravention is less than 1 lakh rupees, so the total compounding amount payable shall not be more than the amount of simple interest at the 10%. So the amount, that is the compounding amount or the penalty amount, should not be more than the amount of simple interest at 10%, calculated on the sum involved in contravention and for the period of contravention in case of reporting contravention. So this is the basic idea, that if the amount involved in the contravention is less than 1 lakh rupees, so the compounding amount or the fine amount shall not be more than the simple interest of 10% on the sum involved in contravention. Now this is the amendment that has happened recently in 2025 in the directions of the compounding, so that we have to understand that subject to satisfaction of the compounding authority in case and in wider public interest and the maximum compounding amount. So basically, subject to the satisfaction of the compounding authority based on the nature of contravention, the application or the exceptional circumstances, facts involved in case and in wider public interest, it is said that the maximum compounding amount imposed may be capped at INR 2 lakh rupees for contravention of each regulation or rule with respect to contravention under row 5. So in row 5, if any breach has happened, if any like rule and regulation has been breached, so in this case the highest or the ceiling of the compounding amount is capped at 2 lakh rupees. Okay, so this is the basic idea. Any confusion till now, anyone? Any confusion till now? Okay. See, let's say that XYZ Indian company is issuing the fresh shares, right? So the foreign investors have invested, foreign investors want to buy these shares. So allotment will be done by the XYZ company, right? If the allotment is done, it has to be done in the time period, within a timeline. If let's say non-allotment is happening, that this foreign investor is not getting the shares, non-allotment is happening to this foreign investor. In this case, the refund has to be done by the XYZ company within a timeline. Okay. Okay. So subject to satisfaction of the compounding authority. So basically, in the fifth row, the compounding amount should not increase INR 2 lakh and it is capped at INR 2 lakh. This is the idea. Okay. The compounding authority shall pass a compounding order within 180 days of receiving the application. This is the idea. As well as the compounding amount as specified in the compounding order shall be paid by way of demand draft or NEFT RTGS within 15 days. This is the idea. Okay. So basically, if the application has been raised by the applicant and the application has been accepted by the RBI, the application has been accepted by the RBI, this application has to be compounded, or the compounding of contravention should be done within 180 days of receiving the compounding application. Okay. And if the RBI has there is some compounding amount that has to be paid by the applicant, so the compounding amount has to be paid within 15 days from the date of compounding order. This is the idea. No, you do not have to remember the data. I have said now that there are hundreds of data, so you don't have to remember the data. I have only told you the reporting, that the contravention, that you can just remember that, okay, these are the contravention points, these are the points of contravention that I have explained in the additional box also. This was not given in the master direction. I have brought these boxes so that you are able to understand. Okay. So the contravention we have discussed, the numbers you don't have to remember. Numbers are not important, just the contravention are important. That word contraventions are there. Okay. So this is the idea. This is the idea. Okay. So this is, and this is the additional point, that subject to satisfaction of the compounding authority that is doing the compounding based on the nature of contravention, the exceptional circumstances, facts involved in the case and in wider public interest, basically the maximum compounding amount that can be charged is capped at INR 2 lakhs for the contravention that is mentioned in the row 5 of the computation matrix. And this was the computation matrix. Okay. So this is it. I hope all of you have understood. Is there any confusion? So this is the first question. I hope you will be easily able to answer this question. Okay, this is the first question. Do try to answer this question. And this is the second question. Again, do try to answer this question. Now, thank you very much. And if you have any query, you can write in the comment section, and do Give me the right answer of the homework question in the comment section. All clear? Okay, thank you everyone. Thank you for joining. See you in the next session. Okay.